What do you want this place to be?
I want it to be number one. Not in the region, but in the world.
Hi everybody, the real estate market of Dubai is considered to be a goldmine investment by celebrities, actors and CEOs all across the world.
Dubai's real estate market is thriving.
It has become the world capital of luxury housing.
Dubai, there's no tax. They just have so much money there.
It continues to see record high prices.
Dubai's property market is defying the trend.
And the Dubai market rates are growing so fast that if you have 1 crore to invest, you can buy a property in Mumbai, Delhi or in Dubai. But fast forward to 10 years, where do you think your money will grow the most? While in Mumbai, it could stand at 1.5 crores at an annual growth rate of 4.5%. In Delhi, it would appreciate to 1.4 crores. Whereas in Dubai, it would shoot up to 2 to 2.5 crore rupees. Now let's talk about rental income, because this is even more interesting if you buy a flat in these three cities for 1 crore rupees. In Mumbai, the monthly rent would be 30 to 40,000 per month. In Delhi, the rent would be 25 to 35,000 per month. In Dubai, the rent would be 70 to 1.2 lakh rupees per month. And here's the best part. While Mumbai and Delhi will tax you on your rental income at anywhere between 20 to 30%, in Dubai, you keep 100% of your profit. Zero tax on rental income, zero tax on capital gains, and zero tax on property. If you talk to any agent in Dubai, they'll tell you this is the reason why India's richest people, from Shah Rukh Khan to Virat Kohli, from Mukesh Ambani to Gautam Adani, all of them are pouring their money into Dubai real estate.
Mukesh Ambani, Asia's richest person, spent a combined $238 million on 2 villas on Palm Jumeirah.
Dubai is emerging as a favorite market for the ultra-rich British footballer David Beckham, with his wife Victoria, and Bollywood megastar Shah Rukh Khan will be some of Ambani's new neighbors.
They'll also tell you that if you compare this to Mumbai or Delhi, in Mumbai you will struggle to find a 2 BHK under 2 crores in a decent location. In Delhi, even after spending crores, you end up in a congested colony with traffic jams, power cuts. But in Dubai, for the same price, you get a luxury apartment with world-class infrastructure, high-speed roads and no pollution. And most importantly, no property tax. Sounds insane, right? But you know what they'll don't tell you? Dubai also has some hidden pitfalls. It has tax trap, oversupply risk, and the biggest danger of all, that the economy of Dubai could crash if a recession hits the United States. So in this video today, we will do a deep dive and try to understand, is the Dubai real estate market really booming, or is it a bubble waiting to crash? Why are celebrities, billionaires and actors so crazy about owning a house in Dubai? And most importantly, what are the hidden traps for an Indian in the real estate market of Dubai? To truly understand why Dubai real estate market is making millionaires overnight, we need to break it down into 5 core fundamentals. And these are the secrets that make any real estate market boom or crash. Each one of these pillars will determine whether your investment will skyrocket or collapse. Let's start with the most exciting factor, which is called capital appreciation. And this number will tell you if you invest in Dubai, will your money double, triple or completely disappear. Let's say you bought a 1 million property in Dubai, London, New York and Mumbai. On an average, this is how much your investment would grow annually. In London, it would grow up to 4% annually. In New York, 6% annually. In Mumbai, 4 to 5% annually. But in Dubai, it would grow up to 5 to 8% annually. This means if you had bought a prime apartment in downtown Dubai for 1 million in 2015, today it would be worth 2 million. So your money practically doubles without paying a single dollar in capital gain tax. Now let's compare this to London. You would have to pay 20% capital gain tax. Same goes for India, 20% capital gain tax, and same goes for the US, 20% capital gain tax on these benefits. Which means Dubai beats every major real estate market when it comes to capital appreciation. But hold on, this is just the first pillar. The real game changer is something called rental yields, because here's where your passive income goldmine comes in. Let's say you bought an apartment in Dubai, London, New York, Bangalore and Mumbai. The question is, how much rent can you earn per year? Let's break down the rental income for a $1 million property in these cities. In London, the rent would be 30,000 to 45,000 annually. In New York, 40,000 to 55,000 annually. In Bangalore, 25,000 to 35,000 annually. In Mumbai, 25,000 to 32,000 annually. But in Dubai, it's up to 50,000 to 85,000 annually. And it just doesn't stop there. While London and New York charge anywhere between 20 to 45% in taxes, in Dubai you keep 100% of your rental income, because rental income tax in Dubai is zero. And this is the reason why investors are flooding into Dubai.
Dubai's property market is currently booming. Europeans are flocking to the Emirates, buying up luxurious properties.
Luxury villas, infinity pools, private cinemas for the world's uber rich. And they are heading to Dubai to invest in a post-pandemic future.
Some of the investors include billionaires from Russia, crypto winners and wealthy Indians, and Asians looking for second home.
But wait a second, before you start throwing all your money in Dubai real estate, there is one major risk that could change everything. And this risk asks a very scary question. What if Dubai's supply outpaces the demand? Could the market collapse overnight? Well, it absolutely can. Here's the brutal truth. Most real estate markets don't crash because of a bad economy. They crash when the developers get greedy, build too many properties, and suddenly there's more supply than there are buyers. And this is where the nightmare begins and market starts to crash. Suddenly the supply floods the market, prices collapse, and investors lose millions of dollars. This is exactly what happened in China, where they built entire ghost cities that no one lives in.
Over the past 2 years, dozens of Chinese real estate developers have fallen into financial distress.
China's real estate sector grew on the back of large loans. But now there's an oversupply. There are more homes than buyers.
It happened in the US during the housing crash of 2008, where an oversupply of homes led to a 29% price decline. Eventually, this crash turned out to be so bad that it took them another 5 to 6 years just to recover to the original price of pre-2008.
10 years ago this week was the signal event of the 2008 financial crisis.
It started in real estate, and it started with subprime, and that's the story everyone knows.
2008 housing crash when values all across the country fell 27%.
So the question is Dubai making the same mistake? Well, let's analyze the most critical indicators that tell us whether Dubai is a gold mine or a landmine. The first indicator is population growth versus new residential units. You see, the golden rule of any real estate is very simple. If more people are moving than there are houses available, prices rise. If developers are building too many houses, prices collapse. This is why it is very important to measure the residents per unit build. Now, if this number is above 2, it means the demand is healthy, but if this number goes below 2, it indicates weaker demand. Now let's look at it. Dubai residents per unit is 2.72, London 2.3, New York 2.55, Mumbai 4.5 to 5. So what this means is Dubai population boom is outpacing new housing, which means prices are rising sustainably. And if you look at Mumbai, this indicator says that there are too many people and very little housing available. This is the reason why rental market in Mumbai is booming. But is it that simple? We need to dig one more level deeper. This is where you need to look at the second factor, the housing absorption rate. This is measured by the number of units sold divided by total number of units available multiplied by 100. This metric tells us how quickly new apartments are bought or rented in Dubai. If you look at this variable, you will understand whether the apartments in Dubai are flying off the market or if they are sitting empty, heading towards a potential crash. Let's say 100 units are available and 80 are sold. The absorption rate is 80 divided by 100 multiplied by 100. That's 80%. So here's how Dubai compared to other cities like New York and Mumbai. New York absorption rate is 82%, Mumbai absorption rate is 83%, and Dubai absorption rate is 89%. And what's even more shocking is that the luxury properties in Dubai have a 95% absorption rate, which means many homes are sold even before they are built. But again, before you get too excited, let's talk about the biggest risk factor, which is affordability. For this, we need to look at something called price to income ratio, PIR. This is measured by median house price divided by median household income. Here's what PIR value means. If it's below 4, great and affordable for locals. If it's between 4 to 6, somewhat affordable. If it's above 6, it means expensive, only upper class can afford. If it's above 10, it meant for high income earners only. Now let's look at the chart of Dubai, New York, London and Mumbai. Dubai stands at 6.7, which means it's for medium and high income earners. New York 14.6, London 19.5, which means housing is extremely expensive in New York and London. And you would be shocked to know that in Mumbai it's 30 plus, which means housing in Mumbai is completely unaffordable for the common man.
Mumbai is home to several millionaires and not surprisingly is one of India's most expensive markets when it comes to luxury real estate.
Having even a small house or some land in most parts of Mumbai would cost you crores.
This is the reason why most cities, including Mumbai, have a huge affordability crisis where locals simply can't afford to buy homes. So if property prices grow faster than income, it means the market is overvalued and it could collapse anytime. This again says that Dubai is a jackpot. But here's the wildest part, guys. Dubai has a rental yield versus mortgage ratio that flips the game upside down and make investors go absolutely crazy. The question is why? Well, that is because in most cities, if you buy a house with a mortgage, your rental income barely covers your EMI. But in Dubai, your rent could completely pay off your loan, which means after your down payment, your house is practically free. Now let's look at this. In Mumbai, London and in New York, EMI rates are higher than rental yields, meaning investors lose money and have to put in their own cash to pay the EMI. But in Dubai, rental yields exceed mortgage rates, which means you can practically pay your EMI with your rental income. This is one of the biggest reasons why Dubai market is exploding. In fact, you can actually make a profit from the rent after paying your EMIs. But here's the catch, guys. You always have to remember that even the strongest real estate market has cracks. And Dubai has some serious danger that most investors completely overlook. Now people, if you have stuck with me until this point in the video, you have been seeing some mind-blowing growth of Dubai real estate market, right? Here's the biggest myth of all. Most people believe that only the ultra-rich investors can make money in Dubai. Well, guess what? That's completely wrong. I did some digging and what I found is absolutely crazy. In fact, the less you invest, the more money you make. How is that possible? Let's break it down. Dubai real estate market isn't a single market, right? It's divided into 5 distinct categories based on price, location and return. And surprisingly, the numbers will tell you that it's not the ultra luxury segments that makes you the most money. Let's look at it. First, we have the ultra luxury category, which is the playground of billionaire and ultra high net worth individuals. You can find these areas in Palm Jumeirah, Emirates Hill, downtown Dubai. These properties starts at $2 million and go into hundreds of millions. But the catch here is that the rental income in these ultra luxury categories is just 5 to 6%. So the question is, why do people buy them? Well, these properties are not bought by people like you and me, right? These are the properties bought by billionaire and they don't buy it for rental income, they buy it for flex. So if you're looking for a passive income, this is not your game. The next category we have is high-end luxury market category, where properties sell somewhere between $800,000 to $2.7 million. This is where high-income investors tap in. But unlike ultra-luxury, rental income here is a bit higher, around 8%. So this is the middle ground between ultra-luxury and high-yield investments. Then next we move to mid-range properties, which starts somewhere from $300,000 to $800,000. And this is where things get interesting. If you want strong capital appreciation and high rental cash flow, mid-range properties are where you should be looking. These properties are located in JVC, Dubai Hills, Town Square, Dubai Creek Harbour. And these are some of the fastest growing areas in Dubai. This category is the safest bet you can take in Dubai real estate market. Then we have affordable housing, which falls under $250,000. And these affordable housing units are found in International City, Dubai South and Dubai Land. These areas make up one of the easiest way to enter the Dubai real estate market. But here's what makes them absolutely crazy. Their rental income go up to 9%, guys. So if your goal is steady passive income, this is where you must play. And lastly, you have the worker and low income housing. And surprisingly, here's where you have the highest rental yield in the whole Dubai. If you want pure rental income, worker and low income housing in Jebel Ali and Al Quais can guarantee 10% rental yield. That's almost the highest rental yield you can find in Dubai. Why? Because these properties are always in high demand due to worker inflow and these units are never empty. But here's the disclaimer, guys. This segment isn't meant for everyone. Managing worker housing comes with a lot of challenges and appreciation is also very low. But if you want guaranteed rental cash flow, this segment is where the gold is. So the long story short, if you are looking for capital appreciation, stick to ultra luxury and high-end properties. If you want cash flow, mid-range and affordable housing offer the best ROI. And most importantly, always remember, if you are a first-time investor, you don't need millions of dollars. You just need the right strategy. So by now you have seen some jaw-dropping numbers, right? Dubai real estate market is skyrocketing, rental yield are outrageous, and there is literally no tax on your profit at all. So this sounds like a once-in-a-lifetime opportunity, right? Well, this is what the real estate agent of Dubai will tell you. But here's the truth, guys. Nothing, I repeat, nothing in real estate market comes without risk. And Dubai has some serious pitfalls that could turn your dream investment into a financial nightmare. So pay very, very close attention to this. Let's break down the biggest hidden danger of investing in Dubai. Dubai property market is tied to the US economy. So while Dubai may look like an independent economic giant, in reality, the economy is closely tied to the US because the dirham is pegged to the US dollar. And if you remember, in 2008, when the US market collapsed, Dubai real estate market also crashed by 50% in a single year. And it took another 4 years for the market to recover. And the reason why this point is even more important today is because the United States is facing record high debt, rising interest rates, and even a possible recession.
America is sitting on a giant mountain of debt. If it erupts, the consequences would be disastrous.
The Fed chief acknowledged that the economy has slowed down in some areas.
It is right now the one thing that is signaling sort of a red light in terms of recession.
So if the US economy slows down, global investors will pull their money out of high risk markets like Dubai, and that could lead to falling property prices and shrinking rental yields. And this is exactly what happened in 2008 and 2009.
At the time, developments ground to a halt and property prices began to collapse as much as 60%. Leadership of neighboring Abu Dhabi, the UAE's capital, announced a $10 billion rescue package for struggling Dubai.
So while Dubai real estate market is booming right now, history shows that it is not crash proof. And if the US economy sneezes, Dubai might catch a serious cold. If that's clear to you, let's move to the next problem, the problem of tax. Now, if you talk to any real estate agent in Dubai, they'll tell you the same thing. Brother, Dubai has zero tax. But here's what they won't tell you. If you are an Indian investor, you still have to pay tax in India on your Dubai property. Any rent you earn in Dubai must be declared in India, and it is taxed at your income slab, anywhere between 5% to 30%. And if you sell your Dubai apartment for a profit, India's capital gain tax applies, just like it does to any other foreign asset. And if you don't report your Dubai real estate income, you could face some serious legal problems. While Dubai itself won't tax you, but if you're an Indian citizen and you take that money back to India, you still have to pay your taxes. And if you don't handle your paperwork right, you could end up in legal trouble. This is the reason why you need to understand a bad investment in Dubai is just as dangerous as bad investment anywhere else. And lastly, you have to be careful of the bubble trap. You see, Dubai looks like it's on an unstoppable winning streak, but always remember, every real estate market corrects eventually. So the $1 million question is, will Dubai crash again like in 2008 and 2009? Well, here's what you need to know. Rental demand is strong, absorption rates are high, the government has placed controls on oversupply, which is a very good thing. Foreign investment is flooding, especially from Russians, Europeans and Indians. But the red flags are, if the US enters a recession, investors' confidence in Dubai would collapse. Ties to the US economy could drag Dubai down, and most obviously choosing the wrong location in Dubai is a disaster. So while Dubai real estate market looks unstoppable today, always remember, no market is crash proof. After studying all these parameters, if you understand the risk, choose the right location, and if you have the capital to invest wisely, Dubai can be absolute gold mine for you. But if you are not careful, this same gold mine can turn into a financial trap. Well, these were my insights about the real estate market of Dubai. Now you tell me in the comment what you learned extra about the Dubai real estate market, and if you have ever spoken to a real estate agent in Dubai, what did he tell you and what did he hide from you? Let me know in the comment section. And if you learned something valuable today, please make sure to hit the like button and subscribe to my channel for such videos. I'll see you in the next video. Bye bye. Thank you for watching.